Hello and welcome to the Motilal Oswal studio. You're watching Buy Now, Sell Now on ET Now with me, Shreyansi Singh and Cheryl D'Souza, and this is the show where we get all of your stock-related queries answered from both a technical as well as a fundamental perspective. But well, first things first, let's take a look at the markets. And Cheryl, it's not a good start to the week.
Absolutely. A very good morning to you, Shreyansi. Not a great morning coming in for the markets, given the fact that we've totally caved in from the day's highest point, at least for the benchmark indices. If you look at the Nifty, it is down about 1% or so from the day's high. Take a look at the small cap as well. What the broader markets are doing in particular, whether they are once again underperforming, and they're underperforming by a margin when you compare it to the benchmark indices, the small cap index as well as the mid cap index. So the selling over there has not actually stopped. It is persistent, as you can see, with the Nifty Bank also underperforming the benchmark indices today. 0.8% down to coming in for the Nifty Bank. Take a look at the advanced decline ratio. That one is not looking good at all at this point in time, which means that we will have a long way to go if we have to see a sustainable recovery, at least in the market as a whole. Because benchmark indices, if you look at the rates on the surface, is just 88 points cuts coming in for the Nifty, but it's the broader markets, it's Nifty Bank and various sectors that are actually seeing a sharper downtick, and that's the cause of concern in trade today. Talking of the list of gainers, then you have Wipro, Eicher Motors, Grasim, Ultratech as well as Infosys among the top gainers on the Nifty. While on the flip side, big boy Reliance Industries is seeing a very sharp fall of approximately 4% as we speak, 3.8% or so, 3.2%, I stand correctly. So 3.2% down to coming in for Reliance Industries, weighing very heavy on the Nifty in particular, and that's why you've seen the sharp, or rather, that sort of a downtick coming in for the Nifty in particular. Coal India, IndusInd Bank, Adani Enterprises, Bajaj Finserv are the other set of losers on the Nifty. Talking about the sectoral indices, what the print is there at this point in time. You have those broader markets, like I said, broad markets underperforming the benchmark, with small cap now actually down about 2%. In excess of 2% as we speak. Energy stocks are trading lower. You have PSU banks that are trading lower. Metals, realty, definitely not a great picture coming in for the markets, because I don't think I can see any sector that's in positive. Okay, IT is seeing marginal up move in trade today. So not a great set of data points coming in for the benchmarks as a whole. But Kunal, since I have you already in the studio, good morning. And when can we actually mean it's a good morning for the markets? Every day we're hoping it'll be better. Today, in fact, we actually thought it'll be better, isn't it?
Yeah, we thought the markets, could be a little bit better than what, was especially on Friday's selling. But then that's the nature of the markets we are, we are going through right now. We are into a phase where the selling, is extremely intense on the mid caps and small caps, and that eventually is putting pressure across, even the larger cap names. There comes a boiling point for, stocks where, after a certain point of time, pressure from, the small and the mid cap names, they generally get translated towards large cap stocks. I think we've already entered that phase for the indices. We are on the verge of breaking below that 22,000 mark, which I believe is again, not a, something which is a surprise as such because of the selling in the last few days. I would still believe that we could be in for some bit of more time where the indices would probably form a bottom for itself. The data points when we look at, yes, the RSIs, the put call ratios, etc., they are at an extreme. We looked at the market breadth. I was discussing this in the morning, that almost 92% of the stocks in the mid caps and small caps are below their 20, 50 and the 100 moving averages. So of course these data points are extremely oversold, but the markets have a tendency of reacting at an extreme, especially when it's in an oversold territory.
Right, and like you were saying, actually 22,000, we are just 12 points away from breaking those levels actually, Kunal. What next? What sort of levels then we have to watch out for? Because earlier everyone was saying that 22,800 would be a very strong support levels. Markets shouldn't fall below that. It fell, it recovered, and then it was just gradual decline day after day from those levels. And now we are actually near the 22,000 mark. So what should one be prepared for in this sort of a market?
See, if you look at, I looked at this as a statistical, point of view in terms of the market sell-off, and we've almost granted almost 1,000 to 1,200 points as a trading range. So, in November, December, when the markets actually bounced back from that level of 24,800 thereabouts, we, fell almost 1,000 points, came back to 23,800 mark. and then bounced back again. So, the markets are moving into a 1,000 to 1,200 point kind of a range with every kind of a move on the upside or whether it's on the downside. So even if you look at this as a more of a relative scale, 22,800 being a more formidable support, I think the next level of support in terms of the absolute scenario comes closer to 21,800 levels for the index. So that's why I would believe that maybe that breach of 22,000 mark is not something which is coming as a surprise. Maybe I think another 200 to 250 points of a correction which we can expect over the very near term.
All right, another 200 to 250 points correction that we can expect for the markets in very near term. But what Kunal is also mentioning, the fact that there are the indicators that are indicating that the markets are actually oversold at this point in time. And even if those indicators are indicating we are oversold, then the markets actually tend to give an extreme reaction. And mostly it is on the downside for some time, isn't it, Kunal? That's what you mean.
Yes, absolutely. So in euphoria, it's very difficult to call a top. In panics, it's very difficult to call a bottom. But yes, the indicators are oversold. It's a matter of time that whenever the markets get back into a recovery mode, the recovery would not be a shallow this time around because of the steep pain the markets have caused. The recovery should be V-shaped, but we just have to wait out for the data point when the markets start to recover and the recovery is more formidable.
So Gaurav, what's your view then? Are you waiting very patiently, and which are the sectors that you are actually looking at like a hawk, hoping that you will get a right time to enter, and which our viewers also should watch out for?
Well, we don't have a choice, right, Cheryl, rather than just wait in patience, right?
Kunal, you have a choice. Are you waiting patiently, or are you? What's your?
Yeah, absolutely patiently. It's always better to try and wait for that turn to happen. So I will always mention this, that wait for the bend to end, and only then I think you can confirm that the trend has ended.
All right, so Gaurang, even Kunal is on the same boat as you are, which I think most of them are. So what should they do? And which are the sectors that you are actually watching out very closely at this point in time, Gaurang?
Well, first of all, thank you very much, Cheryl, for having me on this show, and morning to all of you all. Look, you need to be patient when you invest in stock markets. You can't be in a hurry. And in this kind of a time, when correct me if I'm wrong, Cheryl, in terms of the domestic data points or the events which have unfolded in the last maybe about 1 or 2 months, be it the budget, be it the rate cut, be it the earnings season, be it the commentary from the management, I don't think anything has disappointed or spooked us in terms of the market correction that we are witnessing. This correction is more because of the imported related problems that we have to, not only we as a country, I think all the emerging markets and some of the developed markets also are facing the same situation, thanks to the uncertainty and the suspense that the President Trump is keeping close to his chest with respect to the clarity of tariffs, what amount, on what goods and services, which country, when, how. So that's really a big problem. On the flip side, I think the sell side figure from the FIs have gradually come down. They have not come down to a great extent, but they are coming down slowly, steadily. But that is not the end of the problem that we are facing right now. I think today, tomorrow, we'll have clarity from Mr. Trump, President Trump, with respect to the tariff on Canada, Mexico, China. China has already reacted, saying that they will put counter tariff on certain American agri-commodities that come into China from US, and so on and so forth. So the problem right now is, well, if you're a trader, God bless you, to be very honest, Cheryl. But if you're an investor, I don't think you should wait out more, because you've seen a decent correction in terms of percentage, point-wise, whatever you see it. I think large cap would be a preferred approach to begin with. And if sectorially, if you ask me, banking, IT, autos, cement, cap goods engineering, defense. I think these would be the priority 4 or 5 sectors. Don't rush in. If you have 100 rupees to invest, put in about 15 or 20 rupees right now, because the uncertainty is not going to get over by tomorrow, day after. I think first, second week of April, we'll have another set of clarity coming in from the US with respect to the tariff, etc. So I think we need to wait it out. In this kind of a market, it is always better to, be patient, deploy some small parts. When markets give you further correction, add to that kind of investment strong portfolio that you have been deploying. But, don't try to venture out and don't try to be a Robin Hood.
All right, and don't try to be a Robin Hood. That's the take coming in from Gaurang as well. Good start to the show, not a good start to the week. But tell you what, let's take the conversation forward also. Take the first query that we have coming in from Reena Thomas. And Kunal, she's lost 20% of the capital that she in fact invested. Of course, on your screens, you can see the number that you can also write to us at as well. Do remember to mention the buy price for the stocks that you're already invested in, for the ones that you hope to be invested in. Do remember to mention the time horizon that you also have in mind. But with that, let's take the first query coming in from Reena Thomas. First of all, a very good morning to the both of you. Kunal, this one is for you because she's asking for 2 to 3 stocks that you would suggest, because she has a lump sum of about 2 lakh rupees and she's already lost 20% of the invested capital that she had in terms of her investments. What do you make of this? Are there any suggestions that you have in mind?
Well, so I would suggest that just wait out for some more time. Let this eventual pain in the markets, settle up, because there could be a point where the markets may fall into a bit of an extreme. We are already in that zone, and in that kind of a scenario, the markets generally tend to fall a lot more aggressively. But then I think whenever the turn happens, I think you should eventually start looking at solid large cap names. And the best way to try and categorize these solid large cap stocks is when they start to show signs of outperformance, even when the index is going through maybe a last bit of a pain, or when the markets come into a bounce back kind of a mode. So I think if we see that happening, maybe in the next 1 week, that could be a sign that these large cap stocks and the ones which have been relatively strong, I think they could start to get back into a zone of outperformance. I'll give you an example. Like what Bajaj Finance and Finserv, HDFC Bank, Kotak Bank, I think to a larger extent, in the last 2 months of this market sell-off, these were the 3-4 solid names which had done exceptionally well, relatively strong with respect to the markets. Yes, these stocks may have also corrected in the last couple of days, but then when you look at this on a YTD basis, these stocks have done reasonably well for themselves. So that's a sign of a classic outperformance. Just wait out for maybe another few days. Once the market pains settles out, I think that's where you would probably expect many of these large cap stocks to start to show signs of leadership.
All right, so that's the take coming in on some of the stocks that one can look at, as well as where the markets are headed from here on. But on that note, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we will rather continue taking your stock-related queries with our experts, Kunal Bothra as well as Gaurang Shah. So don't go anywhere.
If you like this video, then like, share and subscribe to ET Now.